Good morning, good morning, good morning. Hey, Ted, I got you reset up there. Just letting you know. Goose, Bob, Rob, Bob, Rob, Larry, Everett, Svenborn, Rex, Helen, Ryan, Darren. I'm skipping around instead of just reading down. I don't know. My eyes are like skipping around on the list. Cliff, Brian, welcome everybody. Gaten, and all my channel members. Glad to have you as always. And you know what? Goose and I have talked about sector rotation a lot, and we talk about it kind of off the record a lot of times. And there's some money to be made, I guess you might say, by being ahead of sector rotation. Now, what I brought today is not being ahead of sector rotation. It's just looking at what was in the past. And the only way you can be ahead of it is to look at what was in the past and understand that the future is going to be different. We don't just repeat the past on sector rotation verbatim, because whatever's the hot thing tends to not be the hot thing in the next cycle. So, what does that all mean? Well, let's take a look at retail sales sectors from October. Now that I have them, now that I found them, and my face is in the way, so I'll put me on the other side here. And here you go. This is what was popping retail sales wise in October. Electronics and appliance stores outperforming a big 2.3% plus. Motor vehicle and parts 1.6. Food service drink places 0.7. Now the underperformers down here, miscellaneous stores, retailers, and who knows what the heck that is. It's whatever doesn't fit in all these categories. Furniture and home furnishings down. Healthcare and professional or personal care stores down. Sporting goods, hobby, book, music stores down. Goose, you gotta buy more hobby stuff, man. I know you've been loading up. You're gonna have to do better. Clothing and accessories down. That's interesting, right? Clothing and accessory. As we come into the different season, usually that's pretty popping, but and then retail sales total, excluding motor vehicle and parts dealers, flat. Gasoline stations up. Food and beverage up. General merchandise up. Non-store retailers up. Retail sales total, we got that 0.4. Retail sales food and service 0.4. Building materials was up. So there you go. There's the strong things, and here's the weak things right there. So these weak things got, I guess, outperformed greatly by these over here, because we ended up with a 0.4 on average across the totality of retail sales for October. I think it's interesting to, I'm not saying there's a trade here. I just think it's interesting to kind of dive in and try to keep up track of these trends. And I'll do more of this if, I give very little feedback on what you guys like and what you don't like. One or two people may comment. So I kind of roll on when one or two people tell me. So, it's one of those things, the more feedback I get, the more I can cater the things to what you want to know. So usually Goose and I like to look at the whole year trend of what was hot for the year, what sectors were hot, and then adjust what we think. So these ones, I'm not saying these are going to outperform, but these ones that tend to be down here tend to come up in this area. The bottom doesn't necessarily go to the top, and the top doesn't necessarily go to the bottom. These ones up here tend to float down the list. And, sectors can mean all sorts of stuff. This is retail sales sectors. Bigger market. You can have utilities and defensives and cyclicals and consumer staples and all those sort of things. And healthcare and pharma and, on and on and on. And the different sectors tend to, like I say, rotate. That's how money is made in the markets. So you kind of have to keep this in the back of your mind that whatever was hot, AI, for 2024 is probably not going to continue to be hot in 2025. Probably not. And that there are exceptions to that. GLP-1 drugs been smoking hot for a number of years. AI kind of spanned from 23 into 24 so far. And one day, NVIDIA is going to drop, though. Mark my words. And motor vehicle parts and dealers. I would be curious. Parts sales versus new vehicles could indicate consumers keeping, yeah. So, and there's parts dealers and so you have the total excluding motor vehicle and parts dealers right there. And so that was almost flat. So motor vehicle sales and parts dealers made up a big chunk, really. You take out the 0.4, you take out that 1.6 gain right there, and you get a flat right there. So it's kind of interesting that was able to pull it up by 0.4 across the entire retail sales. And I'm sure they're, depending on where you go, you could break it down even further. It's just I tend to use third parties for my charts. I don't make these myself. And this one didn't have usually has a claim on who made it, but this one doesn't. I get a lot of stuff from trading desk reports from like JP Morgan and Morgan Stanley and Goldman Sachs. I subscribe to an aggregator that throws these out there for me. So if you wonder where I'm getting them, I have a Zero Hedge premium subscription. Do you need one? No. I use it to get this stuff. And a lot of these little fancy charts come from what's called the Market Ear on that site. So little tidbits. They don't try to tell you how to interpret it. They just throw them out there, and it's up to you to try to keep up with it. So if that's just too much work, that's cool. You can just keep coming back here. I'll try to pull up the interesting ones and share them every day. And like I said, feedback helps me determine what to talk about. So welcome to the day. We are on Tuesday of Thanksgiving week. I will have 30 minutes of awesome at 5 p.m. Eastern tonight. Make sure you come see me. If nobody shows up, I don't have a show. So that's the bottom line. And we've had week showing. Just throwing that out there. We've had, it is one of the most watched replay shows, but I need live people there to make the show. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. Just because I predicted in the past doesn't mean I'll ever get it right in the future. So don't buy stocks, don't buy options, don't buy Forex, don't buy futures, don't buy cryptos, don't buy treasuries, don't buy bonds, don't trade them, don't long them, don't short them, don't buy them, don't sell them. And if you need somebody just to tell you what to do, you're going to have to hire and consult a financial advisor. There you go. And I do throw out bonus trades at the end of every show, or I try to at the end of every show, these morning shows here. So stick around to the end if you want to see that trade. And there's been a little, heartburn. I have this chart of the week channel in Discord, and somebody's like, why don't you post anything in there anymore? It's like, because I throw them out on the morning show. And maybe I should post them over there after the morning show. Just throw them in there and rename the channel. But y'all can give me feedback. Let me know what you think. So anyway, I've got one coming up today that looks pretty darn good. S5TW. Look at this. Stocks above the 20-day. Shot right back up to the top. Look at that. Look at that. That was fast too. Golly. We were just hovering down here and we shot right to the top. Remember, we don't usually hang out up here a long time. A few days, sure. Maybe a week or two, possibly 2. But this can shoot right back down just as fast as it came up here. Stocks above their 50-day. Excuse me. If you're not familiar with these are just indexes. And I kind of keep track of how the market's going. Stocks above their 50-day. We haven't been to the bottom since October 23. It's been over a year since we've been down to the bottom. Now, usually we don't hang out below 20% or above 80% for very long. on any of these three. We're going to talk about the 20-day, the 50-day, or the 200-day. And look at that one. That one shot up. I speculated that we may indeed make a higher high on this one right here. Now, if we come up and make a lower high, that's something to watch out for. If we make a higher high, that's also something to watch out for. If we glance off of that, coming back down, if we come up here and make a higher high, that's probably going to be indicative that we're going to do a bigger flush all the way down to the bottom. Now, the lower high needs to hit the trend line. So far, we kind of have this trend line cooking here. Not very tight. We got a little spike there. So if we break up above 80, it's kind of like the two scenarios there. If we can get this up here, 90 tends to be really spicy. We haven't had anything like that since back here. And this is looking eerily similar to, look over here. See this price action right here? How we kind of ground it and ground it and ground it and ground. And then we made a final spike. Anybody know what that was? Right there. This might be what that might be the part we're working on right here. They're never exactly the same. It's never exactly the same thing unfolding. But that looks, this to me, this feels eerily similar to this right here. Eerily similar. That wasn't, that market drop needed to happen. It wasn't because of COVID. That's the mind bender. It was in the chart well before COVID ever unfolded. Really bends your mind. I know a few of you will argue to the death with me about it, but these things are in the charts before they happen. Whatever's cooking here is in the chart. I'm speculating we may make one more little whoop before we roll. Yeah, just like the bowling door, as Sledge says. Yeah. Unfortunately, I did that in a small private group of, like 5 people, and called the bowling situation before any door flew off. So, ES overnight. ES looking pretty strong. This looks like we're going to push it on higher. We did make a nice spike yesterday, 3-wave retrace. Pretty beautiful on that retrace. Not really great proportional wise. We came up very shy of the third wave being proportional. But this may have been the first move down. This is caution until we break back higher. Just diving in, looking at the market here. Put me back on the right side so I'll block out the information over here. This is back up above the 786, or it's trying to be, and this may be indicative we're going on up. 60.50, 60.55 on the futures. Why am I not using the cash index? Because, well, you don't have any overnight action here. We just got a gap up. There was no overnight price action at all. And that buzzing for alerts is driving me a little crazy. So there you go. And S&P did make a higher high yesterday. We did spike a higher high. Russell did spike a higher high. It made a new all-time high right there. I was pretty shocked. IWM made a new all-time high. Look at that. Just a little bit. Then it quickly pulled back, but it made a new all-time high. Very surprised here. I still think that this is setting up for a bigger... Now, wave 2s cannot exceed the 0 point, right? Let's get into a finer point of Elliott wave. So if this is 0 point, that was the first move down. This is the retrace. Now, unlikely as it may be, it's not the typical thing. But this, it can't be a wave 2 because wave 2s cannot go below the start point or above in the case of a downward move. So that can't be a 1-2, but it can still be an A and a B. Now, why would I think that? Is because this has been overlapping. This was unfinished to the downside, and it looks like we need a third move. Now, B waves can get to about the 1272 extension of an A wave. So if we look at that, nope, I got to do it the other way. 2-point tool, 1, 2. We possibly could extend this thing all the way up in here. So this is a danger zone. Imagine that. That's like the common target right there. This is a danger zone for turning down and getting another move. Now, if we start exceeding this, it's unlikely that this is corrective and this was just nasty and uncountable, but it could be the final, it could still be the final move, and we set up a 1-2 and then flush deeper. So that's kind of the couple scenarios there I'm watching. Most likely, this is just gonna bleed up here a little bit and roll over. That's kind of what I'm thinking, but I welcome being wrong. I'd love to just be in a bull market forever. Not likely going to happen. So watching these 3 right here for topping action, and these don't update live. They're end of day. That's what the little E over here means. End of day, end of day, end of day. If you wanted a live one, you'd have to roll over to barchart.com. I think they have a live version of this. I'm sure there's some other ones out there, but these just update end of day. Oil still churning. My expectation is just it's kind of at rest. Like it's been at rest in this zone, and we're just going to keep being at rest in this zone for the foreseeable future until we either break down below support or we break out above resistance. That can set the direction for a bigger move, up or down. Which one do I give bias to? I don't at this point. This would look best. It would look best if we did this. One fast flush, clean it up, and then we could go higher. Or it could lead to a bigger, even bigger down. What would be the case for that? I don't know. Doesn't matter. I don't really care about the fundamental story. That's it's a hard thing for a lot of people to get your mind around. Hey, Charlie. Hey, Sledge. And good morning, everybody. So gold right here. Caution that we may see further decline. This is in the chart at this point. This was a horrible place to turn down. I really wanted to see that confirm above that 618 zone. It did not. It got smacked down, touched the hot stove, retraced. Now, that was the perfect place to hold, though, if it's just going to confuse everybody. See, we retraced right to the 618. So this could be a measured bounce setup right here. I remove the upper fibs just to clean it up a little bit. So this little spike down could result in this next pop right over here to this zone. What's it going to take to confirm that? A break above this 618 right here. It's getting convoluted. It's piled and piled and piled. Like, this is where some of you have trouble. So we came up, we bounced off a 618. We came down, we bounced off a 618. We came up, or we're coming up. We got to break through that one to confirm that this is up. if we bounce off of that one, can confirm that that's the way we're going. So this is a key right now. Key level right here. We can get above it. We can go up here and possibly get the extension up here. That's the highly likely zone. This is the extension target. We may retrace before we can do that. All right. Hey, morning, Jody. So there you go on gold. Is it clear? No, it's not clear. Like there's this is the way it frustrates a lot of people. The market loves to frustrate the most number of people. How do you do that? You turn down at a 618, you turn up at a 618, you turn down at a 618, you turn up at a 618, and then, so this may continue to do this before it breaks on out or breaks on down. May continue to frustrate everybody. Clear? No. Bitcoin pulling back a little bit. Where might we pull back to? Right in there. Go retest that consolidation. If we can go higher, if we break down below it, we can get a deeper retrace, possibly back down in here to the breakout level. Where's the breakout level? Right back over here. So if we get below this consolidation here, there's not a lot keeping us up here. That's something to watch out for. If we get below that level, I'd like to see it turn and bounce. But at this point, 2 down days does not make an uptrend. 2 down days does not make a downtrend. We're just consolidating. That was a large up. Think about it. From here in August to right here last week, that was a big up. We've had a few consolidations in here. That was over 100% up in a relatively short amount of time. We gotta consolidate. Like, that's the way the market works. All right. There's no straight up. There's no straight from here to there almost ever in the market. Even over here, rest for a few days, rest for a few days, pulled back one day up to the top, and then rested for like 6 months. Go back over further. Even the last big halving run. Up, rest for a few days, up, rest for a bunch of days, up, rest for a day, up even more, rest for a couple weeks, up, rest for a couple weeks, up, uh-oh. So these are, we'll have big up days, we'll have big down days, we'll have rest periods. If it just goes straight up, it's likely to come straight back down. So there you go. Ethereum, Ether, still lower highs. This one's got me a little concerned here. That, golly, just got me a little concerned. I just don't like the way this is. Talked about a lot of stuff over the last couple weeks, months. Just to clean this up a little bit. We got right to the resistance. Where did that resistance come from? It came from this pullback right here. This high in November. High in November. Low in July. This big 618 right here. This littler 618 lined up right exactly on it. So this big pullback from the high on the last Bitcoin halving cycle to this low right before they changed it to proof of stake. Underperforming here after the proof of stake. I thought we might see that. For those of you who've been listening to the Crypto Power Plays for years, I didn't like the proof of stake thing. came up, and we're finding resistance at that double 618. That 618 lines up exactly with this 618. There's strong resistance here. This may result in another pullback before we can break through. Not the best looking chart. And one that is much better looking, for people that, which crypto is looking pretty good. Look at this. I mean, Solana trying its darndest. Highly likely to get up here. One of the better looking potential upsides besides Bitcoin right here. This is not like a 10x or anything like that. It just has a nice potential upside. Dollar going back higher a little bit. Look at that. That's a weird. That's weird. Two candles that look almost identical. That means it closed here, gapped back up. Somebody really likes this level. But somebody really likes to sell that level. That's kind of weird. Really weird. Really, really weird. That's an unusual candle pattern. Up strong, push down, gap back up, push down. This might be indicating a flush. So looking for any other instance where we have exactly that. I don't see it. I don't see that, an example of that where we have two red candles like that. It's a very rare pattern. Very rare pattern. Because it takes a very special circumstance where we would gap back up. Pushed it down, closed down, gap back up while it was closed. Now we're pushing it down again. Very rare. NKD showing some softness. That took back the last 2 days. Back to the roadmap line again. Global liquidity seems to be struggling a little bit here. And like I said, this is Thanksgiving week. I've not had a banging Thanksgiving week in like the 30 years I've been doing this. So keep it in check what you expect. All right. So I go to the pre-market. I pull up everything moving $2 or more up, put it on the gainers list, $2 or more down, and put it on the decliners list. That may change as we get in the open, as we can see on DKS over here. But it doesn't matter. We're doing this to look for what's moving today and trying to find some opportunities. So Lily here, guess what? That could be done. First move down, retrace back to the high, and third move down, right to the zone. That might be done. I might buy a couple shares back. I bought a couple in here, tried to write it up. It kind of did this, and I bailed. I bailed. Actually, I think I bailed right there on this one. I was like, not feeling it. And then there was a good reason why I didn't feel it. So this could be the bottom. We need to break back above the roadmap line. You could buy aggressively now if you're willing to stop out right there. I don't know. It's not the highest probability thing out there. That high, that low. 618's up here in the gap. Like there's a lot of things that this has to work through. This is a play on GLP-1 drugs. If you don't have any clue what that is, Google it. Talking about Ozempic and Wegovy and Zepbound and the other one that partner in crime for GLP-1 drugs also hit a potential downside. Didn't do that. Didn't do a bounce. Just went directly, do not pass go directly to jail. Right to the target zone. Right there. That was pretty nice. So both of those kind of flying parallel, and the correction might be done. This one, of course, much higher flyer and could experience a bigger decline. So earlier I was talking about the fact that this has been on a climb for several years here. When you look at it that scale, it probably could do something like that before the bigger down. WWD, Woodward. I also think it's interesting. So the Hims and Hers, there was a shortage of GLP-1 drugs. So these guys had this exemption when a popular drug is placed on a shortage list. Compounding pharmacies can come in. Hims and Hers is a compounding pharmacy, can come in and create a patented drug, not using the patented process, but they can create a patented drug and sell it to help fill the market. That GLP-1 drugs went off of the emergency shortage list, whatever. I'm just summarizing here. And that created a big drop back here in Hims and Hers back here. That was kind of like the reason for that. And then it shot right up here and then retraced right off of the resistance. And now we're going again. But they're not allowed to sell those GLP-1 drugs anymore. That's interesting. Or they're not supposed to be. They may still do it. I don't know. Hey, Wild West, right? So Lilly and NVO not experiencing the shortage of GLP-1 drugs they were. So that's also interesting. I guess their production capacity rising to meet the demand. But that also could, these giant pullbacks could be that they were spending a lot of money on increasing capacity, and now they can profit from that capacity. You tell me. I mean, just making up stories. That's why I say the story doesn't matter, right? Just the chart pattern. So Woodward's up at the target. I would expect maybe a little further. But that's the kind of stuff we get retraces before we do it, or we could come back to the roadmap line. DKS was popping into resistance. We do have that big gap up there. Watch for that to retrace. Yeah, so interesting. The volume on Bitcoin, daily volume, about $20 to $30 billion. The volume on Forex, which is kind of like the invisible market for most of us in the US, is $7 trillion a day. So you think about, like, people talk about crypto being giant market, blah, blah, blah. It's a guppy compared to the $7 trillion daily market in Forex. So, but there's some moves afoot that Bitcoin could become preferred collateral globally. I thought that was interesting. There's some institutions approving Bitcoin as a preferred, preferred instrument to hold collateral, a preferred collateral, and they'll give you leverage if you bring Bitcoin to the collateral table. Leverage to borrow currency. I thought that was interesting. So that could create more demand for Bitcoin. And this is not like an overnight demand situation. So ADI, Resistant. That's, you look at a chart like this, where's the resistance? It's right there. Get above that. We can go on up here, 250. We turn down off of that. We can make another lower low. So there's the uptrend. If we break below that, we're going lower low down here. How low would that be? Well, that's why we have a 3-point tool. The first drop right here, that highest high at this point, and that further drop could be right down here if we break down below the uptrend of lows. So that would be the target there. And on the upside, here's the target. If we can break above that right there. What do I expect? That right there. That's what we expect. That's what you have to expect until we break out or break down. SMTC. Target. Looking for another retrace. PSTX. Wow. Ridiculous. And it's not a... There's no reverse split. That's absolutely nuts. Sava got hit on their Alzheimer's drug, getting kiboshed, and these guys popping all the way up here. What they announced today. Acquisition, Roche. So merger and acquisition, not tradable. SJM, Smuckers. Who likes some jelly? This is a potential big picture measure bounce right here. No joke. Look at this. I've been watching this one for a while. See, look at this. I just moved my alert. Awesome. Come back down in here. I need to lock those, but I don't. So look, it does these multi-year consolidations. Use my drawing tool here. And then goes on a nice big fat run. Look what we're doing right here. Possibly. Maybe. Big money and jelly. We'll see. We'll see. We'll see. We'll see. And that also could pull back. You know, this could be the little retrace in here, and we get a bigger pullback. So cautious. That's why I haven't taken a position, but the immediate upside right here shows we potentially could rally right up into this 200 area. That's about a double just on shares. I like things that are like 10x though, not just my doubles. I like, I like to get in the ones that have 10, 20, 30x potential, not just a double. EXAS. Just chopping in a downtrend at this point on the daily chart. Not breaking highs, not breaking lows, just chopping. More sideways to down would be what I expect there. NXPI looks like it wants to come on down. AWPR or ARWR, excuse me, ARWR. That's a, it just needs a reverse split to be a dumpster fire, right? That's pretty nasty downward go. VKTX, boy, a bunch of biotech showing up today. That's always a big cautionary tale on the day when biotech dominates the list. Usually that means we get some craziness. SRPT, another biotech pharma, choppy sideways. ZENA. You could give it to me, but I would not risk my own money on this. Dear gosh, that's nasty. NVIDIA, that sure does look like we're coming back down to the roadmap line. If we break down below it, watch out below. TXN. Just churning. We hit the target, we retraced, sets it up again. That high, this low. If we break above the 618, 224, 227 potentially on the upside for Texas Instruments. TI. So there's the level to watch, and there's the upside. Toyo popped up to, is this tires? No, semiconductors. Toyo. That looks like a SPAC. And caution, that hit the 618. That can lead to this reaction. Rambus. Downtrend of highs. Be careful. I'm not buying it. USD indicating semiconductors are soft. SOXX indicating semiconductors are soft. SOXL indicating semiconductors are soft. So we might see sector rotation out of semiconductors and AI. The signs are there. Ultra short Ethereum plummeting to the abyss. MTK. Reverse split. This is the dumpster fire. Nasty dumpster fire. NVDL. Coming back to the roadmap line. Got to investigate. If there's opportunity in the puts for the leverage longs, I guarantee that the calls are cheap here, but the potential for this to lose money is pretty great. There's been no bumps and humps at all. Whereas this has got wicked moves. NVO, like I already said, potentially bottomed. Resistance up here at the roadmap line. When we get there, it'll be there eventually. If you want the roadmap line, links in the description. It's like $5. Or you can click on my channel name down here under me. Go to the video I have pinned to the homepage is the roadmap line video. Tells you how it works, gives you the code. You can do it all for free. But if you want the easy button, just give me the easy button, add it to my chart. Give me a list every week of stocks doing the pattern. $5. Easy $5. Easy button. Anyway, that nasty. NVDA. Watch out. That could have been it. That might have been it. That would be the supports. And as I've talked about before, this can do a 70 to 80% retrace. Lots of people have said I'm full of crap. But let's just go with 60, right there. 60. 60% retrace. Back to 60. We don't even have to go that far. Look, 67%. That was just in 2 years ago. Oh, look, another one. 56%. 2018. 18. 19, 20, 21. These happen more often than you might think. Let's look over here. Oh, there's another one. Look at that. 80% retrace. Oh, another one. 80% retrace. Ooh. What if we did an 80%? Ooh. That's a nasty number. Be careful out there. Just warning you. Just warning you, this thing's pretty cooked. Looks a lot like this chart right here. Sucked everybody in. Now we got some complacency. Just need to take everybody's money. Sector rotation. Semiconductors looking weak. Who's the king? NG&E. Nice potential measured bounce. This is a dumpster fire. But it doesn't mean it can't do a crazy pump. That might be worth it to buy a few shares just to see. AMD. Still looks like we're going to flush it on down. Amgen. So decliners, stuff that was moving $2 more down in the pre-market. Amgen getting slammed. That's probably coming back to this area right in here. That would be what I expect. MSTR. Suffering on Bitcoin being soft, but not too bad. I don't think this one's done on the upside yet. You can fade me if you want to. MSTU, that's leveraged MSTR. MSTX is leveraged MSTR. Other ways to play. Coin. Nice. This one's holding up really well. It looks like we're about to pop 430 up here. That'd be my next expected target. Put a little baby up here. Baby target. A bigger target, longer term, up here around 500 to 600. That maybe where we top out this cycle. Look at where the IPO was. We took a giant retrace down to the bottom. I don't think I'd expect much more than 500 or 600. Now it could go a little crazy. We could get to 1,000, but maybe even 2,000. But I'm not really expecting that right now. On coin, the leverage way to play, or a leverage way to play, Connell needs to pop out to about 100. Yeah, there's not a. I like those X ones. Different brands, but like the T-Rex one. Anyway, back to what we're doing. Zoom. Got smacked off the high. I kind of thought we would do that. There was a giant gap down over here. I think I talked about that yesterday, that we may retrace off of that zone. QMCO. So Zoom, if it comes back to the roadmap line, that would be a giant buying opportunity if we came back down here and held. We can do that and hold. Big opportunity to break through. If we just consolidate here, it may pop through just all of a sudden. Wake up one day, we're up here in the hundreds. QMCO. Dumpster fire. I wouldn't touch it. STZ. This is, let's see, where did I put the chart? There it is. So we saw Food and beverage stores. No, restaurants. Where's restaurants? I thought I saw it in here. I guess retail food service. That was up. Food was there. It is. Food service and drinking places. That was up. Not so up on Constellation Brands. Let's see. Kind of soft there. Kind of soft there. Oh, pizza. PCs. Yeah. Really soft there. That's the only one that's really been outperforming. Look at that. Soft there. Outperforming there. It's very. It seems that that right there is very picky about where people are going to spend their money. Burlington Coat Factory. This will probably rally a little bit into the cold season. We're expecting a colder than anticipated winter at this point. Natural gas hyping, but when that, you can say it's all news, but if we get to 308, we may retrace. This may run its course up to $4. Connell leverage coin. I expect it to pop on up to this 100, 110 area. SLNO. Nasty chart. Be careful. I don't like biotech pharma. I just don't. Their drug can... Oh, guess what? The drug we've been spending billions of dollars on just got denied. And that's the end. You know what happens? You know what happens? That. We've been pouring billions of dollars into Alzheimer's drug. Looking good, looking good. Everything's positive. Oh, guess what? Doesn't work. KSS. Plummeting into the abyss. Retail not being good for Kohl's. Ouch. Probably going lower low. There's a lot of charts that kind of look like this. Are these shoppers trading down to Walmart? Possibly. They probably have been for a long time. Ooh, that looks rough. Also looks a lot like DG, Dollar Tree. And KSS. That's interesting. Inon. Watch out for the retrace. ATRO. Ooh, smackdown. Aerospace defense. Well, that's not just popping everywhere. That's for sure. BITU. Ultra Bitcoin. So BitX is my weapon of choice, but you could play BITU. It's probably going to rock and roll higher as Bitcoin climbs toward, say, into the six figures. You know, it's not toward. We're right at the line. As it cracks into six figures, those will perform. ETHT, ultra leveraged Ethereum. I have ETHU. I have a bit of this, a few hundred shares. This one and this one may suffer. Ultra means leverage. Be careful on leverage. DXYZ. Oh, guess what? We're failing to go higher. Looks a lot like the bubble pattern. Chop, chill out. break down, come back down. It's going to rip everybody. Almost guarantee it. EETH. Potentially trying to break through. BLBD. Bluebird. Oh, bust demand must not be hyped up. Watch out for the lower. RKB. That's rocking and rolling. ALV. Autolive. Looks like it wants to come down to the 618. BKCH. Global X blockchain. And we could extend that one up 88.97. Watch for retrace. That could do just a sharp retrace before we pop. And GM. Looks like we're kind of extended here. Bigger picture, we could be rocking and rolling up to 76 to 86. This little pullback right here looks kind of played out for now. We may need a retrace before we can push on higher in that bigger picture. FBTC, Fidelity Wise Origin Bitcoin Fund, rocking and rolling. It's just Bitcoin. BKKT. This one is a buyout from DJT. Retracing. I don't know what, potential for DJT to buy out BKKT. We'll see. We'll see. We'll see. Filing for truth. Yeah. Nothing new. On that front, GBTC. Just another Bitcoin trust. Pulling back. MS. Rocking and rolling. Next upside target 137, 146, but that may be needing a retrace. So bonus trade for the day. Dun, 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 dun. I didn't get it put on here, but it's right here. MTH. Look at this baby. Another awesome one. 87.5%. 24 trades. Not quite a statistic population, but since 1988, so it's been around a while. Last 62 days on average. The target to 2136. Stop below 162. That is a fat range with a 25-point upside. Profit factor 5.1. Pretty smoking right there. We found that the ones that are high win rate and a larger than 2 profit factor tend to be the smoking hot ones. Bonus here, we have an uptrend on the roadmap line. I like it. Another potentially really strong one right here. Skags if you're around. So that's MTH. Do have a split coming up. Splits have not been overly bullish in the market, but that can play out into the split. Beautiful. That's actually really nice. Look how consistent it bounces. Very nice. I apologize if you can hear whatever is going on outside. Lots of sirens. Dividend yield, not the greatest, but there you go. All right. So that's the bonus trade for the day. And bias for the day. Apparently passed closer. So bias for the day. Maybe we're going to get that continuation higher. Let's jump down and look. Yeah, we did a 3-wave retrace yesterday. Potential starting out here. A little shallow for 1-2, but it did hold the roadmap line. A lot of times, why do I use the roadmap line? But because wave 2s and eventually wave 4s, when looking at the correct time frame, tend to hold that roadmap line. Little secret. So if this is a wave 3, we'll probably see it rally on up here. Like that. Then we'll probably see a retrace back to the roadmap line. Then we'll see the extension up here. Need that one we need that one to continue higher. 21.1. retrace, and extend. All right, everybody, that's kind of the bias for the day. I'm expecting higher. If so, the levels to watch: breakout and breakdown. There's the levels right there for NQ. Very similar to ES. Breakouts above here. Breakdown below the roadmap line right there. Breaking out, we're going higher. Breaking down, lighten the load. Probably going a little deeper. How much deeper? Go from that high to that low to whatever high we make here. And that would be the expected downside off of this. Right there. We get below that. All right. Remember, 5 p.m. Eastern, I'll be back live this evening, this afternoon, this evening, wherever you might be, 5 p.m. Eastern. That's 4 Central, 3 Mountain, 2 Pacific. Have a great day, everybody.